Hey guys, welcome back for the weekly updates. As usual, I'm going to be doing the Bitcoin, BTC versus USD. I'm going to be doing all the time frames, and I'll start with the monthly candles. I'm just going to jump straight into it. So here I meant to show this chart for quite some time and I keep forgetting. So this is the index, the BLX chart here on TradingView. And it's the chart that has the most history for BTC. That's why I'm going to be using this today. And the reason I'm showing this chart today is to try and estimate the timing for the bottom, when the bottom could potentially be in. And I'm going to explain all the lines that I have here. So this is all based in technical analysis, support resistance lines and trend lines, and past history. Of course, history doesn't have to repeat itself every time, but it's been working in every bubble before. So first of all, the blue lines here, the vertical blue lines, are the halving event when the supply gets cut in half. So it's not the exact dates, but it's close enough. These are the monthly candles, so it should be close enough. And we can see right when the halving happens, it's like the precursor for the bubble, because obviously if the supply gets cut in half and the demand continues to grow, the price has to go up. There's no other way around it. So, so long as the demand stays the same or grows, when we have the halving, the price should be going up. As I said, unless the demand continues to go down, then that would be an exception. But yeah, so these are the blue lines. Then we have the diagonal lines here, the black diagonal lines. These are the trend lines that usually hold for a few years before they break, and they start to form always in this uptrend. After every bubble, Bitcoin finds a bottom and starts a new uptrend. This time less vertical than the previous one. And in this initial uptrend, which is not crazy vertical, it's more sustainable, than the bubbles that it goes through after. So this uptrend, during this uptrend, you can start drawing a trend line, and then you extend it. And then, at some point, the price starts to go crazy into bubbles, and then it comes all the way back down to the trend line, and it breaks, and below the trend line it finds bottom, and then again it repeats. It starts a new uptrend, but this time less vertical than the previous one, until it goes crazy into another bubble, and then it falls back down to the line. So right now we are at around this line. The monthly candle hasn't closed yet, but I would expect this trend line to be broken at some point, find bottom below the trend line, and then start again another uptrend, but this time less vertical than the previous one, and so on. So these are the trend lines, and then the red trend lines, which are downtrending here, are the resistance lines that we had in every bear cycle, in every bear market, long-term bear market for Bitcoin. So you can see these red resistance trend lines have been respected perfectly all the way down from top to bottom. So here, this is a perfect trend line, and every candle reacted perfectly. And if we went into smaller time frames here, you can see the price reacted exactly, and in every bounce it rejects from the trend line all the way down to the bottom, and this one as well, all the way down to the bottom. And most importantly, the previous one in 2014 also it respected this trend line all the way down to the bottom. So what this tells us is that until this trend line it's not broken in the upside, it means we are probably not at the bottom. Once the trend line breaks in the upside, then we know the previous low in bigger time frames was bottom, probably, by probability. Of course, nothing guaranteed. Now, the horizontal lines here, the support and resistance lines, horizontal black lines, are I put them at every bottom of every bear market. So here the first one at $2, not very relevant for this, but I wanted to put all the bottom, you know, all the support lines that held bottom in every bear market. The reason I put them all here is because usually the bottom of every bear market will be the top of the previous bubble. Well, more or less, it's not exact because in this bubble here, for example, we can see it went up to 266 according to this index chart, and the bottom was lower, was at 160 more or less. But you can see the candles closed you know, right below the line, and here right above the line. So it's more or less, it's just an estimate, right? It's not exact, but what I mean is that Bitcoin usually finds bottom at the what it used to be the top of the previous bull cycle. So I put these two horizontal lines at the top here. These are my estimates for the bottom, guesstimates. Of course, you know, I don't know, but you know, according to patterns, 3,000 could be bottom, around 3,000, because it was a very, very significant peak here. We had this bubble in 2017 when Bitcoin went straight from $800 to $3,000. And when it peaked at $3,000, it went into a short-term bear market. It went into a 2 months bear market. So that was a very significant peak. And it could act as a, you know, as a bottom support. It could, it might not, but there's the potential. If this one breaks, the 3,000 support breaks, then in these bigger candles, we don't have any support until all the way down to the top of the actual previous bubble in 2014, which was around $1,200. So that's why I draw these two lines here, one at 3,000, one at 1,200. These are, you know, potential bottoms, but it could be anywhere in between as well. So if you take these two horizontal lines and then you combine them with the resistance trend line, the red line, that's a resistance line here all the way down, and you compare these to previous cycles, you will see that the bottom is right around, you know, when these two lines meet the top of the previous bubble plus the diagonal downtrend trend line. So, you know, the bottom, what I'm trying to say here is that I estimate the bottom, if we bottom up at 3,000 following this diagonal downtrend line, the bottom could be found in May 2019. If 3,000 breaks and this diagonal trend line, the resistance line continues to be respected, if we go all the way down to around $1,200 for the peak of the previous bubble here, then we could be reaching this bottom on January 2020. It says here, let me move this. So at the very end here, this is January 2020. So we could, you know, potentially be waiting that long until we find the bottom. It all depends how deep it goes. But I guess the short message is, the short message here for this time frame is we need to wait for confirmation of bottom, and the strongest confirmation, in my opinion, is going to be when this resistance trend line, the red line that's going down, when this one is broken in the upside, that would be a confirmation that we found the bottom on the previous low. When will it be? Well, I don't know, but whether it's at 3,000 or whether it's at 1,200 or whether it's anywhere in between, I expect this line to continue to be respected, just like it happened in every single cycle. It's a perfect line going down. This one was touched here, well, one time at the bottom, and then 2 times, 3 times, and the third time it broke. Well, actually, the third time here got rejected as well. It took a few months until it broke. So in this case, it only touched 1 time and 2 times. So I expect to at least be tested 1 more time before breaking, if not 2 times. So I'll be monitoring this downtrend line. And yeah, as I said, when it breaks, then that's strong, strong signal that we could have found the bottom. On the weekly candles, well guys, this has been playing out exactly as expected. If you go back to my previous videos, I gave this target at 3,500 like a long time ago, maybe 2 months ago or 3 months, I don't even know when. This is the target from this smaller triangle within the huge triangle, because the target for the huge triangle is too low. I don't want to call for such low targets yet. We need to look at the charts every day and see the price action before calling targets that are super far away. But the closest target was from this small triangle from top to bottom, and then you put it on the breakout at the level of the breakout, and it gives you 3,500. So this target's been here for a long time, and the price is reacting like exactly to the target. So nothing to be surprised about here, that now we are bouncing. We were extremely oversold. So it's normal to have a bounce, but I have been saying, since I gave this target a long time ago, I said that could potentially be a bottom, but not sure. But basically I was saying the target is very probable that it'll be reached. It doesn't mean it's going to be the bottom, but it could be. It's a potential bottom, but so far it was only a target. So the target, it's been reached. As it looks right now, I'm less confident that this was the bottom. I have been expecting the bottom to be at the very least either the 200 week moving average or the 50-month moving average, which both are around the same level, which is $3,000, which is also psychological number, and also the peak of the previous bubble here. The one that I was talking about before from 2017. So I think this level will be at least touched, maybe overperform in the downside a little bit, and that could potentially be the bottom. But we are at 400 to 4,200 right now, so there's a long way down to $3,000. So I think this level will be reached at some point. Based on many indications, for example, volume. If we compare the current situation with the previous bubble, I think based on volume and chart patterns, I think we are right here. I think we are here. You see how the volume in this breakdown here, in this first capitulation, not final capitulation, but first capitulation, the volume started to increase, but it was nothing near to the all-time highs compared to the to the current bubble at that time. Now, I don't expect the volume to be all-time highs for the whole history. I expect to be at the all-time highs from the previous bubble here in 2017. So we're still not there. I don't expect, as I said, the volume to be like high up until here, like it used to happen here, but I do expect it to be higher. Not only that, not only the current volume doesn't seem to me is final capitulation, it's very similar with this breakdown here, not only because of the proportion of the size of the volume comparing both bubbles, but also the volume patterns that we've seen prior to this first capitulation. In this previous bubble, you can see the volume was decreasing and getting super low prior to this breakout, and the price also, the volatility was like ridiculous low here. So it's the same thing we've experienced right before this current or this previous recent breakout that we had here. Volume going ridiculous low, volatility going ridiculous low, and then capitulation in price and volume. Same thing happened here. Volatility super low, volume super low. It was actually the lowest volume and volatility out of the entire bear market. I think we were right at the same situation here until we finally broke down, and this is only the first capitulation. So I think now we are bouncing just like we were here in this first capitulation. So it's normal that we could be going up or sideways for quite some time before the actual breakdown that's going to come in the future, and I expect to see higher volume than the one we've seen here. So yeah, I think we are here based on on patterns and volume. Of course, it's not impossible that 3.5 was actually the bottom. As I always say, the lower we go, the more probable it is that we are at the bottom. I don't believe that was the bottom. I think it's normal that we are bouncing, and even 6,000 should be retested as a resistance and reject from there. The only way I'm changing my mind and I'm gonna say, okay, this was probably the bottom at 3.5 is if we actually go above 6,000 and stay above 6,000. If we go to 6,000 and just test it and and maybe close a few smaller candles above it, that's not confirmation for me. If we actually stay above 6,000, significantly, then I would be changing my mind and saying, okay, this was probably the bottom at 3.5. But so far, we're far from there. I think 6,000 could be tested as a resistance, but I would expect price to reject back down and have a final capitulation down to 3,000 or below. On the daily, as I said, we're having an oversold bounce. We were very, very, very extended in the downside, so it's just normal to have a bounce here. We're also very extended from the 200-day moving average, so I expect the price to go up a little bit more. Not saying it'll make it all the way up to the 200-day moving average, but somewhere between probably the next strong resistance is going to be at 4,800 if we make it there. If that one breaks in the upside, then 6,000 would be next one, and then the most optimistic one would be bouncing off the 200-day moving average. If the price even makes it that high, which I doubt it, but if it does touch 200-day moving average, that would be perfect short opportunity, because not many times you have the opportunity to open positions when the price touches 200-day moving averages. This applies for bull markets and for bear markets. It's not very often that the price dips as deep as touching the 200-day moving average in bull markets. So when that happens, it's not often at all, is the perfect longing opportunity. And same for bear markets. When the price goes, retraces all the way up to touch 200-day moving average during bear markets, that's like the perfect shorting opportunity. I don't anticipate it'll get that high, but if it happens, as I said, that would be very good for shorting. I would like for sure be selling some BTC there with the intention of buying lower, later on. So, but for now, the price is bouncing. All you can do here is, if you entered long at 3.5, then if it was me, I was going to enter long here at 3.5, because I have been calling for this target like a lot. I've been sharing it a lot on the premium rooms on Telegram with my members as well. I was gonna buy the 3.5 target, but I don't have the orders set on exchanges. I haven't been, using exchanges during the bear market, not as much, but I missed it because I was actually celebrating my birthday when we touched this target, and then I was like drunk, and then I was like hungover the next day, so I kind of like, I didn't do it, so I missed it. But if I was in this long, I would be taking profits on the way up. I would have already taken some profit probably, and then 4.8 would be my next target, taking a lot out of the table, because we had a very deep, there's a lot of pressure, selling pressure at that level. We'll be able to see it in the next time frame. And then maybe I would be keeping some just in case we make it all the way up to 6,000, and I would be exiting for sure at 6,000 if it gets there, and then just waiting. On the 4 hours, as I was saying, here at 4,800, we have a lot of selling pressure. You can see this dip. It went from 4,800 down to 4,000 in like a few hours. So when you have these types of dips, these types of sell-offs here that heavy, this signals that there's a lot of selling pressure at this level. And if this level is made again in the recent future, there will usually be another sell-off, because sellers don't go away that fast. You know, I expect a lot of selling pressure at 4,800, so I would be taking profit from this long at 4.8, maybe keeping some just in case it goes higher. And then if it doesn't go higher and it rejects back down, then I'll be, you know, continue to take profit on the way down, you know, before reaching my entry level here. But that's how I would be playing this. And on the 1 hour, well, we can see here the price is reacting to the 20 and 50 moving averages. Now it's going below the 20 period moving average, so I would expect to find support probably before the higher than the 50 period moving average. This is at around $4,000. So yeah, we have a lot of support here. You see, you know, the price reacted here a lot. So I would anticipate it'll find support, you know, at 4,000 or higher, and then continue to go up by probability. I mean, nothing is sure, but just like I say, in bigger time frames, the general trend is down. In smaller time frames, the trend is up. Right now, we're having an oversold bounce. So I would, you know, continue to play continuation here until proven wrong, until this rolls over and it goes all the way back down. Another possibility as well is that it goes back down here and it continues to consolidate at the 3.5K target here. And if that's the case, if we have, you know, we had already here a double bottom, if it comes back down all the way to this level again, then I would assume consolidation at this level, and then eventually at some point break down and make the target at 3.1 here, 3,150. I expect a real bounce at 3,000 or 3,150, because this is the level of you know, very, very strong moving averages. The 50-month moving average and the 200-week moving averages are both at this level, and we again also have the $3,000 peak from the bubble in 2017. So that I do expect that level to be super defended. Potential bottom, we'll take it from there if we get there. That's about it for the chart, guys. Now when it comes to market sentiment and psychology, I'm paying close attention to this as well. So if we look at the psychology of the market, I think when we were stuck at $6,000 consolidating there, I was reading the market sentiment. I thought that was like denial, like, because so many people calling bottom at 6,000, bottom consolidation accumulation. I mean, it wasn't impossible, but now we know it was not the bottom. It's been broken heavily. So I'd say that was denial. We just entered panic phase in this sell-off. I think people is in panic now when it says here, it says, oh shit, everyone is selling. I need to get out of here. I think this is the sentiment right now, which means we are we're still not on capitulation, and we still need to see capitulation, anger, and depression. So I think this is the stage where we are entering right now, panic mode. Because of the recent sell-off. That's all, guys. I hope this is helpful. Thank you very much for watching, and I will see you soon. Bye.